Hi, welcome to lesson number 3, taxation exam type questions. Now, this is the most important one. We need to solve all these taxation questions so you can understand and have even much more knowledge with how to tackle exam type questions that have to do with taxation. Now we have a statement here. I know you are looking, you're like, where's the calculator? Now we'll be occasionally bringing it in because we need all the real estate on the right. We cannot afford to give anything to the calculator. The calculator will be floated in occasionally. So let's get started. So now, Mr. Shabalala here, you see the statements that I was talking about. By now we need to break it down. Mr. Shabalala is a 32-year-old man that works for Box Fashion. He oversees the packaging of boxes that must be distributed to customers. He receives a monthly gross income of 32,542.80. He contributes 7.5% towards his pension fund. Mr. Shabalala is married and has 4 children. He contributes towards a medical aid for himself and his family. Now, let's continue with this so you can see what we are supposed to do here. Let's break it down first. So when we are breaking it down, we are going to use a small box here. The first thing that we know that we need to pay attention to is the fact that this human being is 32 years old. So we know that we have here a 32-year-old man. And the reason why we know this is that this will help us when it comes to rebates. We don't necessarily need to know where he works. He oversees the packaging. We don't necessarily need to know what he does. He receives a monthly gross income, but this we need to know. So we know that there is a monthly gross income. So let's simply start with the income. The income is 30. It's 32. 32. Why am I writing this 32 like this? This is not the way to write 32. It's 32,542.80. Now this is the monthly gross income. That is important because now you understand all the terminologies. I also contribute 7.5 towards a pension fund. So this was the monthly gross. There is a contribution. You know now our non-taxable income. So there is a 7.5% that is contributed towards pension fund. So this is for pension fund. Mr. Shabalala is married and has 4 children. He contributes toward a medical aid. So Mr. Shabalala also contributes toward a medical aid. Anyone who contributes toward a medical aid, they are going to receive medical tax credit, our rebates. You remember those ones. But now for who and whom? Well, himself first. Himself is the payer or is the medical contributor. It's not only himself. So we have himself plus. It was told us that the human being is married. How can you join a medical aid and not put your wife? Does that make sense to you? It doesn't. Plus the wife and plus the 4 kids. So now we have 4 kids, 4 children. So we are going to have number 1 children, number 2 children, number 3 children, plus number 4 children. It will make sense when we get there. Do you see this whole statement? Do you believe that this is what they wanted to tell us? That there's a 32-year-old who earns a monthly gross income of 32,542.80 and contributes towards a pension fund, 7.5% of their gross income. And they also are part of a medical aid for the human being who is paying the wife and 4 kids. See, now that we have summarized it, it becomes easy for us to start solving. Now, let's start solving. What's the first question? So the first question says that calculate Mr. Shabalala's annual taxable income. I believe I made this clear in the past video that there is something called an annual taxable income and an annual tax payable. An annual taxable income is the income that you take, and therefore it's when you take the gross income and you subtract the non-taxable income. So when they are saying let's calculate the annual taxable income, by now we know that the first step is to come up with the formula. What does the formula say of an annual taxable income? Annual taxable income. It says that you take their gross income. So you take their gross income. So you take their gross income, and what do? You subtract it with the non-taxable income, which is by now you know, pension fund, UIF, and also donations. I said what is not here, you don't have to subtract it. You will subtract only what is here. What have we here? We have a pension fund. Do we have a UIF? No. Do we have a donation? No. Therefore, we're only going to subtract. So, monthly way and annual way. Remember, there's a monthly way and there's also an annual way. So, whichever, the answer is supposed to be the same. And I feel this can be even more helpful. If I'm doing it the monthly way, do it the annual way and see if the answers, they become the same. So you can just pause and start doing it the annual way. I'll be going to be doing it the monthly way. So now, because we have been given 7.5 as a percent, it's not an actual amount. We need it to be an actual amount. By now, I told you that in order for us to calculate our pension fund and make it an actual amount, it's 7.5 over 100 multiplied by what? By the gross income, which is 32,542.80. What does that give us? Occasionally, like I said, we'll bring in this human being here. So now let's go to the human being and simply say that we have, before we do that, human being was not here. We don't know where human being was and what human being was doing. So having cleared human being, let's say 7.5 over 100, and we have to multiply by 32,542.80. What do we get? So we get that it's 2,440.71. This is the monthly pension fund that they are supposed to contribute. Now we can go back to our calculation. So now we know that the gross income, or the monthly gross income, is 32,542.80, and we subtract only the pension fund. It's what is available, 2,440.71. What do we get as the answer? So we say 32,542.80 when you subtract 2,440.71. What you get is an answer. So you get 30,102.09. Remember, this is the monthly taxable income. We need an annual taxable income. What do we therefore do? We multiply it by 12. So we just say multiply by 12. And then we are going to get 361,225.08. That's how you calculate your, let me move this. That's how you calculate your annual tax, your annual taxable income. That's how you calculate your annual taxable income. By just knowing the formula, everything simply becomes easy. If it's given as a percent, you have to take it off the gross income so that it can become an amount, an actual amount, and therefore you have to bring it this side. So by now you are comparing whether your annual way is the same as my monthly way. They have to be the same. Now number 2, 4.1.2, this is a pink. Calculate Mr. Shabalala's medical tax credit for 2024 financial year. So we are supposed to calculate the medical tax credit for the 2024 financial year. So now the second question is that we are supposed to calculate the medical tax credit. Medical tax credits, we need something to refer from. So it's Annexure B. I might not particularly, let's do this. Annexure B. I have an annexure here. It might not particularly be Annexure B, but it is an annexure. And since the annexure is so far, we are going to take the numbers and we are going to go with them there at the top. So first of all, remember we said that we have, in fact, to make this easy, let's do this. Let me do this here. Okay, I don't want to write I don't want to write. I do not want to write. I just want to lift this. Yes, that's what I want to do. I want to lift it until you can see the medical tax credit so that it becomes easy for us to solve. Yes, now that I have done that, we can continue because I still want you to see the information so that you understand what we are talking about. So let's continue now. So this is what we have. We are supposed to calculate the tax credit for 2024 financial year. Remember we said we have the payer, the wife, 1, 2, 3, 4 additional dependents or children. So what's the first thing that we are supposed to do? We go to 2024. This is 2024 right here. So for the taxpayer, it is supposed to be 728 plus. So we are done with himself. The wife is for the first dependent. The wife is the first dependent. First dependent. It becomes 728. We are done with the wife. Now we are left with the 4 kids. The 4 kids, it's for each additional dependent. So it is going to be 246 plus 246 plus 246 plus 246. 1, 2, 3, 4. We are done with 1, 2, 3, 4. Now, what does this whole amount give us? So now, let's go and get our calculator. So we are going to say that 728 plus 728 plus 246 plus 246 plus 246 plus 246. Make sure you have 4 of 246s. Yes. So now we understand that it's going to be 2,440. But this is the monthly tax credit. This is the what? It's the monthly tax credit. I always said, let me move the calculator here. I always said that it's per month. We are always given our tax credit monthly. So how do we make them to be annually? So we multiply it by 12. So multiply this by 12. You are going to end up with, let's just say multiply by 12, 29,280. So that means that this human being, Mr. Shabalala, they have a medical tax credit of 29,280 because of their contributions. Now, let's continue. Now, 4.1.3, it says that. So let's make a line here so we can continue. 4.1.3, calculate Mr. Shabalala's monthly tax contribution. This is important. How much are they paying towards their tax? But do you see that it's not annual? They want you to know how much are they paying towards their tax monthly. So this does not now mean that you have to go here with a monthly amount. Again, let me get this. Let me get this because now we need it. Like we need it. We need the full force. We need the full force. There we go. Now we have the full force so that we can start with our calculations. Yes. So we have already calculated our annual taxable income. Like I always told you, in order for us to come to this table here, we need to have calculated our annual taxable income because this is for taxable income. From the previous video, I told you that you need to focus on the numbers on your right. You need to focus on these numbers on the right. These numbers on the right. The numbers that are on your left, they do not matter. What matters is the numbers on your right in order for you to identify the bracket. The first thing when it comes to calculating the tax that a person is supposed to be paying, you need to get the tax bracket. So let's get the tax bracket. Again, between 361,225 and 237,100, which one is big? Obviously, it's the 3. So it's not here. Between 361,000 and 370,000. Okay. This is where we are. So we're at tax bracket number 2. So since we are at tax bracket number 2, let's just write here that tax bracket number 2. What does tax bracket number 2 say? We have to come here to the tax rates. It says that 42,678 plus 26% of taxable income above what? 237,100. Let's solve it. By now I have told you how to solve it. So first things first, we repeat exactly as it is. It's 42,678 plus 26 over 100. What is this of? It's the multiplication of. And then you open the bracket. This above is subtraction. So now where is our taxable income? It's still here. So we are going to open our bracket and say 361,225.08 subtracting 237,100. What did I say we do? Or how did I say we are supposed to solve this? I told you start with the sign, or you start with the sign that is at or that is on your right, and then from there you continue like that. The sign that is on your right is a subtraction in these brackets, and then your multiplication, and then you end with your addition. So let's do it just like that. Let's go to our calculator and try and solve this one. So let's bring our calculator back. Let's do this. So let's say, what is 361? Okay, 361,225.08 when you subtract 237,100. It says that, I say you come here, see here, exactly here, because this is what you were solving, right? So you just come here and you say we get 124,125.08. We are done with this. Did we solve number 2 and number 3? No, if we did not solve them, we have to go down with them exactly as they are. So multiply 26 over 100 plus this 42,678. Now we go to solve number 2. Number 2 is between 26 over 100 multiplied by 124,125.08. So now let's go there and say, what is 26% when you multiply it by 124,125.08? It says that, you see, this is what we are solving, right? So we come exactly here and we say, it says that it's 32,272.5208. We have solved this. Have we solved number 3? The addition? No, we haven't. Therefore, we go down with this 42,678 exactly as it is. And now what do? We have to add. It's the remaining one. So since this one is already here, we can simply just say 42,678 and see what do we get. So it says that the answer is 74,950.5208. This is the amount that you were supposed to pay, but because we have a lenient, rather should I say, government is what? Lenient. Therefore, we are going to enjoy rebates. So let's come here and see which rebates are we going to. Remember, we are talking about an individual that is 32 years old. You've already made your notes. Now you understand that we have an individual who is 32 years old. So now, because we have an individual that is 32 years old, let's put our calculator aside. So now we have to subtract. So now when it comes to our subtraction, first thing that we're supposed to subtract is the rebates. 32 years old, they fall within the primary rebate. So we are here, 2024. So we're simply going to come here and say subtract 17,235. We don't have to subtract and also subtract. We can also subtract the medical. Remember, This and the medical, we call them the discounts. We can subtract the discounts at all. Another discount that we calculated, it's this one. It's the medical. And you see, we had to make it annual so that it can fit here. This is annual. This is annual. The medical, if you had 2,440, and this is the mistake that some lenders are still doing. They take the 2,440 and they subtract here. It makes your whole answer wrong. Why? Because this is a monthly. I always told you. Let me go a bit down. I always told you. You see, it's a what? It's per month. You cannot subtract it on the taxable income. It's per month. You are supposed to subtract an annual one. And the annual one is the one that we calculated here. So you are going to say subtract 29,280. Let's bring back our calculator and see what it has to say with regards to this. So bring it there. Because the number is already here, the 74,950.5208, which is this one's already here, we can simply say subtract 17,235, also subtract 29,280. What do we get? So now we get 28,435.5208. I want you to pay attention to this. We have a pudding. A pudding, you deal with the pudding with regards to the gross income. Pudding is for gross income. Let me put something here. This will make sense. You now understand that we have our pudding. Pension fund, UIF, donations. These, they relate to the gross income. I felt the need to write this here. And then you also have your discounts. What are your discounts? Your discounts are the medical tax credits and also the rebates. You use these ones after you have chose the bracket and you have solved everything in the brackets. That's when you use this one. After the bracket calculation. The reason why I'm saying this is so that you can understand to differentiate between this. Your pudding works before the bracket. In fact, this is what I was supposed to say. Pudding works before the bracket. Before you select the bracket, you use your pudding. After you have selected the bracket and you have worked out the calculations, then you use your discounts, which is the medical and also the rebate. So yes, we can continue from there. We have not solved the question. I think you can see that we haven't, because the question said, what is the monthly tax contribution? So since we're calculating an annual, anything that comes out of the taxable income or these rates of tax, it's an annual. How do we make it monthly? Well, we simply divide it by 12. So since the answer is already here, let's just say divide by 12. So monthly, this human being, Mr. Shabalala, is supposed to pay 2,369.626733. It's the final answer. You can round it off to 2 decimal places. It's going to be 2,369.63. This is their monthly taxable, or this is their monthly tax contribution. I hope you're still with me. Now let's continue. Let's see what the next question has. So, this question says that Mr. Shabalala, and as you can see, we no longer have marital estate, so we'll have to try and move things around here. Mr. Shabalala's mother is 65 years old. So Mr. Shabalala's mother is 65 years old. This is a statement that needs to be broken down. And a taxable, this is important. This is important. A taxable income, not a gross income. Immediately they say you earn a taxable income, you have earned the right to use this. See? Why? Because it's a taxable income. The reason why we were not using this with gross, it's because we first had to change the gross and make it taxable. And having done that, it's then that we're coming here. But now they are telling us that it's a taxable income. So we are very much allowed to come here. But before we come here, pay attention. It's per month. We have to make this an annual. Mr. Shabalala claims that his mother is earning below the tax threshold. Remember, I explained tax threshold is the maximum income that an individual can earn before they start paying tax. It's a maximum amount that an individual has to earn before they start paying tax. Thus, she is not supposed to contribute towards personal income tax. So it's saying that she's earning below the tax threshold. Remember, I said if you earn exactly the tax threshold or below, you still do not pay tax. We are supposed to verify showing our calculations whether this is correct. So now let's do this. Because I do not have, as you can see here, the real estate is do not have enough real estate. So what I'm going to do is this. I'm going to cancel out all these that I have written here. And why am I doing that? Bear with me. The reason why I'm doing that is so that in the end I can take this and move it this side, so that I can have this small real estate here. And now I know you are like, no, we are not seeing here. No, it's fine. You will see what I'm going to do. First things first, I want to make my small notes so that you can understand. So let me come here. So we're told that we have a 65 years old. That 65 years old apparently ends, so we know this. Why do we know this is important? Because we know this is important for rebates. Rebates. And also that 65 years old ends an amount of 10,321. But this amount that they are earning, it's a taxable income per month. Now, we are supposed to show by calculations that this human being is not supposed to pay tax. How can we show that? We use tax threshold. Are they below or are they above? So now to show whether they are below or they are above, first of all, we have to make this an annual. The reason why we're making this annual is because our tax threshold, now I know you cannot see it properly here. Let me do this so that you can see it. Can you tell that tax threshold is for a tax year? Meaning that it's for 2024, 2023, and 2022. It has to do with annual amounts. So let's bring it back here. And let's call our calculator here so that we can continue thoroughly. Now, to make this 10,321 to be annual, what do? We have to multiply it. So let's say 10,321 multiplied by a 12. 10,321, when you multiply it by a 12, what do you get? It says that you get 123,852. That means this is the annual taxable amount that they are earning, and they are 65 years old. Are they supposed to pay tax? Let's just go and look at the table. By now you understand, I told you what the definition is. So let's bring the table this side. I hope you will see. I know it's filled with a lot of things. The screen is filled with everything. I'm trying to get some real estate. It looks impossible, but here, finally. So now we have this amount, which is 123,852 for a 65-year-old. The question is, should they be paying tax in 2024? Remember, it was 2024. Was it 2024? Yes, threshold for 2024. So it was 2024. So now, since they are 65 years and old, they are here. This is 2024. Is it the same or below? it's 123. This is 148. So it's below. Indeed, yes, they are not supposed to pay. Yes, they are not eligible to pay tax. Yes, they are not eligible to pay tax because they do not qualify to pay tax. If they were earning 148,270, it would still be the same thing. They would still not be able to pay tax. Why? Because if you earn the same or you earn below, you do not qualify to pay tax. So what's the last? Show how the fixed amount of 179,147 in tax bracket 5 was calculated. I feel like the screen, there's already a lot of mess here, but let's do this. You need to know this and you need to know how this is calculated. So again, having found the answer for this, I'm going to wipe this. So that I can bring back this tax table where it was from the beginning. So let's do some wiping here. You're not supposed to wipe everything. It's fine. Now let's bring it here. If you know this, it will get you a lot of marks easily. So the question that we are being asked here is that show by means of calculations that the fixed amount of 179,147 was calculated. Here is tax bracket number 5, and here is this 179,174. How was this calculated? You must be asking yourself, how exactly was this calculated? Well, this is simple. 1, 2, 3, 4, 5, 6, 7. Logic is important when it comes to mathematical literacy. There is no way you can get to 5 before getting to 4, meaning that any number that is at 5 can be explained by what happened at 4. Any number that is at 4 can be explained by what happened at 3. Like that. But how? That was the question. So now let me wipe this. Let me wipe this so I can show you. I think I can deal with this real estate here. I think this real estate here can allow me to show you how it's calculated. We said that in order for us to understand how this 147 was calculated, and we said that because it's at number 5, we need number 4 to show us how they arrived here. Do this to your calculator. The tax rates for number 4, they say that 121,475 plus 36% of taxable income above. What is it above? It's above 512,800. By now, you know how to make this to look like it's supposed to look, to be calculatable. 121,475 plus 36 over 100. Multiply, you open them. But now the question is, what do we put here? Because now that's the question you should be asking yourself. Okay, what are we supposed to put here? I mean, how are we supposed to get it exactly as it is? Well, come here to the left of the tax rates that you were using. Use this 673. 673. And then you are subtracting the number that you were given, which is 512,800. Because it's a 3-mark question, you can go step by step. You can, number 1, number 2, number 3. Because here we are proving, see, we are not calculating the tax payable or the annual tax payable or the monthly tax payable. We can simply bring our calculator. But you have to be careful with what you are going to do here if you are just bringing your calculator. This is what I mean when I say you have to be careful. So, 121, 475 plus 36% multiply, open brackets, 673,000 minus 512,800. Do we get it? There we go. Exactly as it is. 179,147. That's how it was calculated. Now I know you are glad you are here. See, this is how this amount of 179,147 was calculated. It was calculated by using the rates of tax for bracket number 4 and also using the taxable income as the 673,800. Quickly, now I want to do this quickly so that it makes sense for you. Then you will practice the rest. If the question was, how was this? Let me use a pink. This will be done quickly. How is this 77,362 calculated? This is under tax bracket number 3. Who can explain what is happening on number 3? It's number 2. So what is for number 2? So let's quickly do this. So now let's say that 77 is not number 2. Number 2 is 42,678 plus, I'm doing this quickly, so I'm not even writing, over 100, and then you multiply, you open the brackets. What did we say you put under the taxable? Well, you go on your left side, you take that 370, the number on your right, 500, and then you subtract. You subtract this. It's 237,100. And then, you see, you get 77,362. 77. You can practice the rest and see where you get. Just try and practice the rest. But that's how you do it. So just try and practice the rest. Now, let us move on. I know this will be a longer video. Maybe we'll cut it into two. We need to cover as many of these so that your understanding is on a different level. We need to cover as many of these. So now let us see what we have here. Telma is a 67-year-old manager at Zenzele Holdings. She receives an annual salary of 680,000. She will also receive a bonus equal to her monthly salary during 2025 tax year. She donates 30,000 of her annual salary to the local orphanage. Yes, this is a lot. Okay. Whenever we see this, we know it's for rebates. This is an annual salary. You see, they didn't tell us whether it's a gross or it's a taxable. They just say it's an annual salary. They are also telling us that she will also receive a bonus equal to her monthly salary during the 2025 tax year. She donates to the local orphanage. That's a donation. That's a pudding. That's a non-taxable. If there is a non-taxable, then that means that this amount is a gross that she's receiving. But let's go to the calculation so we can see. This is what I was talking about on the first lesson. An individual can donate a maximum of 100,000 over a period of 1 year. So meaning that their donation must not be above 100,000 in a given year. So let's go and look at the questions. What's the first question? The first question says that determine the rebate amount of which Telma qualifies. To make this simple, I'll do this. Bear with me. I'll take this. I will put it on the right. Why am I putting it on the right? It has already, it will give us, it will make it easy, in fact, for us to solve. So I can put this on the right. Yes, like this. I think this will be even more easier to solve these questions. So the first question here says that we need to calculate or determine the rebate amount which Thelma qualifies for. Thelma is 67 years old. Can't see that. Now you can see that. 67 years old. Where does 67-year-old fall? Here. What did I say about people who fall under the secondary category? I said that there is no way they could have ended up there, except they have also been to the primary. So we take both of them. So when we come here in the calculations, this is what you're supposed to do. You are supposed to say that 17,000, which is the primary, plus 9,444, which is the secondary. What's the amount? Let's come here. Now let's say that what is 17,235 plus 9,444? It says that Thelma qualifies for 26,679. That's how you deal with the rebates. Now let's see what question number 2 has to say. So question number 2 is here. Calculate her annual gross salary. So here we are supposed to calculate how much exactly in a year is she earning. Remember, they gave us the annual salary, but then they came back and told us that this particular individual receives a bonus. That bonus is supposedly equal to her monthly salary. So how do we go about this? In order for us to know what the bonus is, we have to break this into a monthly salary. How do we do that? We divide by 12 because it's already annual. So we are going to say that 680,000 divided by 12. What do we get? Calculator, come back. Come back and please come this side. So 680,000 divided by 12. You are going to get 56,666.6667. It's not a final answer, so there's no need for us to round it off. This is the monthly salary. This is the monthly salary. They said that particular individual will receive a bonus equal to a monthly salary. So this is the bonus that they particularly are going to receive. So what are we supposed to do to know the total, calculate her annual gross? Well, we are going to take what she earns annually plus the bonus that she will receive. 66667. And let's see exactly what will she get. Because we already have this here. Come on, by now you know how to use the calculator. You can just say 680. And then you will get the answer. This particular individual, their annual gross will be 736,666.6667. Can round it off to two decimal places by saying 67. That's how much they are going to have as a gross salary annually. Now, show with calculations that Thelma's annual donation is 100,000. This is some tricky questions because now I want you to look at this. We're told that Thelma donates 30% of her annual salary. Annual salary. I hope that is important. That is important. Annual salary, not annual gross salary. Annual salary. This is her annual salary. So, what is 30% of that? That's where we should start. So, where we are going to start here is that what is 30% of her annual salary? Let's see. What is 30% of her annual salary? So it says that the 30% of her annual salary is actually 204,000. It's 204,000. This is the amount that she's supposed to donate. But according to law, you are not allowed to do this. How do we know that? It has been given us here an individual can donate a maximum of 100,000. But so because according to the law, you're only allowed to donate a maximum of 100,000, therefore we can say that the annual donation will be kept at 100,000. We have proved, because according to her, she wanted to donate 204,000, but according to the law, she cannot do that. Therefore, she will donate the maximum, which is 100,000. So that's how you're supposed to answer such a question. Hence, determine Telma's annual taxable income. By now, you know that taxable income is equals to gross income subtracting your non-taxable income, which is your pension fund, UIF, and donations. By now you know the drill. Do we have her gross income annually? Yes, we have calculated it there at the top. It says it's 736,666.67. Do we have pension fund? No, the statement didn't say anything about pension fund. Do you have UIF? It said nothing about UIF. Do you have donations? Yes. How much are they? 100,000. So what's the answer then? Let's come here and say that 666.67. When you subtract 100,000, what do you get? Well, you get 636,666.67. That's the annual taxable income. Now, identify her tax bracket. Now, I can simply just move this aside. By now, you focus on the numbers that are on your right and you compare them with this one. If it's bigger than them, that's not where you get your bracket. If it's smaller than it, that's where you... So, the question is, between 636 and 237, which one is big? Obviously, it's our. Between 636 and 370, it's ours. 636, 512, it's ours. 636 and 673, this is big. That means that's where it falls. So we have tax bracket number. It's number what? 1, 2, 3, 4. Tax bracket number 4. We have identified the tax bracket. Now let's continue and see what else we have to calculate. So now we have to calculate for this 6 mark. I'm glad we have this spot here to make our notes, because this looks like a paragraph to me. Let's look at this paragraph. Telma claimed that a person under the age of 65. Okay? A person who is under the age of 65. Let's come here and say under 65. With a taxable income of, so they say with the taxable per annum, the taxable income of 95,750. This is taxable income per year, per annum or annually, it's per year. Does not qualify to pay tax. So, does not qualify to pay tax in 2025. So we are supposed to verify whether this is correct or not. Remember, in order for us to verify whether someone is able to pay tax or someone is not able to pay tax, we need to do some calculations. They've already given us a taxable income per year. I want you to notice something. There is nowhere here where it's talking about tax threshold. Okay, so now you're confusing me. I thought that in order for us to determine whether a person is supposed to pay tax or not, we need a tax threshold. Well, if there is no tax threshold, you go back to the raw calculations. And in order for you to know whether they're not supposed to pay tax, it's either you have to get the final answer as a 0 or as a negative. as you can see, it's a 6 mark. Remember the one that we had at the top, it was a 3 mark. Hence, we had the tax threshold to refer to. But now we don't have it, so we have to do the raw calculations. So let's start with the raw calculations. So just here, we first have to determine the bracket. How can we determine the bracket? So we haven't even subtracted the pudding. No, we don't have to subtract the pudding. Why? Taxable income. Taxable income. Already when you have the taxable income, they have done that for you. So it says it's 95,750. Again, how do we choose our bracket? The question. Between 237 and 95,700, okay, we fall here. It has to be tax bracket number 1. So it's tax bracket number 1. What does tax bracket number 1 say on the tax rates? It says that 18%. I'm glad there is such a question. By now you'll understand how to answer all taxation questions. 18% of taxable income. What is 18% of taxable income? We can simply say that 18 over 100. What is our taxable income? It's this 95,750. What answer do we get? Let's go get our calculator. Let's say that what is 18 over 100 multiplied by 95,750. It says that you get 17,235. What else are we supposed to do here? We are supposed to subtract the rebates. How do I know we are supposed to subtract the rebates? Because we've been given age. And the age says it's under 65. A person who is under 65, they only qualify for the primary rebate, which is 17,200. Now look at what happens here. 17,235. When you subtract it by 17,235, you actually are going to get 0. So do you see that by using raw calculations, we have actually proved that this particular individual is not supposed to pay tax. So we can come here and tell them that they were saying that it does not qualify. Yes, indeed, the statement is valid. This particular individual does not qualify. That's how you get your 6 marks using the raw calculations, proving that someone does not pay tax. I want to outline something here. If you are given a statement, in the statement there is no age. A statement, and in that statement there is no age, and that you are supposed to calculate tax. Pay attention. I said this. Logic is important in mathematical literacy. Can a person be alive without an age? No. If they did not put an age, they omitted it. They just did that, deliberately so. You know that that person falls under the primary only. If a statement does not have age, that person falls under primary only, primary rebates, because each and every human being that is alive, they have to have an age. If they omitted it deliberately, put them there. So there are still a lot of questions, by the way. I know you are like, what? Yes, I told you this is important. This is where you put practice to a different level. By the way, this is the last one, so don't be like that. Don't be like that. Stick with me. Don't be like, hey, I see you. Where are you going? Come back. We're not done. Nope, we're not. So, what have we here? Now, this is what we have. So we have a tax table and everything. Most importantly, we have questions. So let's put it aside for now. Let's try and deal with this. After these questions, we should be done. Mr. Lovu, who is 58 years old, by now you know what this is for, earns a monthly income of 60,000. Each month, she contributes the following from her monthly income. You see, they just tell you that it's a monthly income. They didn't tell you whether it's a gross, whether it's a taxable. But immediately when you go down and you see things such as these are part of your pudding. You know that this is gross. Because if they give you pudding, that means you have to subtract the pudding from the gross so that you can get a taxable income. So, we have a 58 8 years old for our rebates, and then they earn a monthly gross of 60. That's 60,000. My apologies. Monthly gross of 60,000, and they are contributing 7.5 towards pension fund, and they're also contributing 1% towards UIF. Finally, we have met UIF. But this UIF, supposedly it has a maximum of 7. That means you are not allowed to contribute above 148.72. Now, 2.1.1. Explain what the tax threshold for people 65 years and younger mean to a taxpayer. To explain this, we already understand that tax threshold is the maximum amount or the maximum income a person can earn before they start paying tax. But let's look at theirs so that we can put it into context. They were supposed to say in this context. I don't know why they didn't say. So in this context, what it means is that a person who is 65 years and younger and earning 83,100, they are not supposed to pay tax. That's what it means, basically. So let me try and write it here so that it makes sense. An individual who earns it was 83,100 or below, aged 65 years or younger, they do not qualify to pay tax. That's what it means. Explain what the tax threshold for people 65 years and younger mean to a taxpayer. So an individual who earns 83,100 or below, aged 65 years or younger, they do not qualify to pay tax. In order for them to qualify to pay tax, they must earn 83,101 because this is the maximum that they can earn without them having to pay tax. Now, let's continue. Because they didn't say in this context, I feel like here you could have simply said that now, tax threshold for people who are 65 years and younger who earn less than or exactly the same as the tax threshold amount, they are not supposed to pay tax. Could have simply said that. Let's go to calculate Mr. Ndlovu's annual taxable. See? Annual taxable. It's fine. Let's use the monthly way. I've been using this for so long, the rate for so long. My eyes are no longer doing well. So let me try and go back to the gold. So, taxable income, by now we know that taxable income, you have to take the gross income. You subtract it with the non-taxable income. Say, what are non-taxable income? By now you know that it's pension fund, it's UIF, it's also donations. Are we going to always have 3 of them? No, you have seen it in the past. You can have pension fund without UIF, without donations. You can have UIF without pension fund and donation. You can have donations without UIF. You use what you have. What have we here? We have pension fund. We have UIF. Do we have donations? No, we don't. Therefore, we won't subtract them. It is as easy as that. I mean, this is just logic. So, now let's continue. Gross income. Let's do it the monthly way and then we'll continue like that. So now with gross income, first of all, we have been given 2 percentages here. So we have to fix those percentages so that they look like amounts. I said you always calculate your pension fund and your UIF since they are percentages on your gross income. Let's say pension fund here, and then let's say that 7.5 over 100, when you multiply it by 60,000, what do you get? Let's say UIF here, and then let's say that 1% over 100, when you multiply it by 60,000, also, what do you get? Where is our calculator? Let's bring our calculator here. So calculator, what is 7.5 over 100? Let's see what it has to say. Multiply by 60,000. It says that it's actually 4,500. Okay, thank you for that. Again, what is 1% over 100 when you multiply it by 60,000? It says it's 600. We have some sort of a problem here. According to the law, the maximum is 148.72. According to us, we should be contributing 600. The law will always have the upper hand. The same thing that happens with donations. So that means that our contribution will actually be 1,148.72. So how do we put that into calculations? Gross is 60,000. Pension fund, let's subtract it. It's 4,500. UIF, let's subtract it. It's not 600. If you do 600, you're already doing the wrong calculations, because according to the law, they cannot be taking 600 from your money. They have to be taking a maximum of 148. So it's 148.72. Calculate, come back. You are needed. What is 60,000 when you subtract 4,500, and also when you subtract 148.72? Calculator says that it's 55,351.28. Remember, this is a monthly taxable income. Monthly, they said we should calculate annual taxable income. What do? Multiply by 12. You have to be as sharp as possible when it comes to taxation, because any mistake of taking a monthly for an annual or an annual for a monthly, you are going to mess up a lot of calculations. So pay attention. You see, I donated an hour to making this video. You have to be donating more than that. You have to be compounding that seriously in your practice. So now we have 664,215.36. This is our annual taxable income. Now, let's see. The second question says, determine Mr. Love's annual medical tax credits. By now you understand something. Annual medical tax credit. Let's see. Medical for herself, husband, and 2 kids. Medical, where is this rate? How did we miss that? Because it was supposed to be for the medical aid. It's supposed to be herself plus husband plus 2 kids. So 1 child plus 2 child. By now you know what that means. Now let's go and see what they are paying. In fact, we don't have to go and see what they are paying. To make things easier, we can just drag this. No, we are dragging you. We are dragging you to the top. We are not doing what you are thinking we are doing. We are dragging you here so you can tell us what are these medicals that you don't want us to know about. Yes, there we go. Now we can do our calculations. So for the medical, let's do this. Let's put a line here. So for the medical aid, first of all, we have herself. Per month, per beneficiary for the first 2 beneficiaries. So the first 2 beneficiaries in this regard, it would be herself and also the husband. So let's say that 319 plus 319. And then how about the additional? Additional for each is 215. So we have the first child, which is 215, plus the second child, which is 215. We can get our calculator and we can move it to the other side, and we can say, what is 319 plus 319 plus 215 plus 215? And then we get that it's 1,608. Are we done? No, we are not done. The question said annual, and it's always monthly. Multiply by 12. Multiply by 12. You get 12,816. So let's go to the last question. What we can do here is that this guy, go back where you are from. What's wrong with you? There we go. Now the question is simple. Mr. Ndlovu stated that her monthly, Mrs. Ndlovu, apologies about that. Mrs. Ndlovu stated that her monthly tax contribution is 9,111.75. So she's saying that she pays 9,111.75 monthly. We have to verify whether that statement is correct. We have all the resources to verify that statement. The first thing we are supposed to do, take this and look for a bracket. Let's do just that. Now, between 205 and 664, which one is big? It's obvious. Between 664 and 321, it's obvious. Between 664 and 445, it's obvious. Between 664 and 584, it's obvious. Between 664 and 744, this is big. That's where we are. We are at tax bracket 1, 2, 3, 4. We're at tax bracket number 5. So, tax bracket number 5, which says that, what does the tax rate say? It says that 155,505 plus 39% of taxable income above 584,200. To make it easy for yourself, you don't need markers. Apparently those ones are not, I don't suppose they would allow you to go with them inside the exam room. But a pencil, just tick. Make sure that you are getting it right, because you might start with this and end up with this. Trust me, I've seen such things. You can start with this and write where you get there, you end up having put this here at the end. So if you have marked it, you know that it will be easy for you to write it. By now you understand how we are supposed to go about it. So it's 1,55505 plus 39 over 100. Off is multiply. We open brackets. What is our taxable? It's this one. It's 664,215.36. What is our above? It's subtracting. What are we subtracting? This one. 584,200. Where do we start? Well, I'll repeat and repeat. We start on the right. The sign on the right. We go to the sign on the left. And then we end with the sign on the left. This and this. Now, let us start. Calculate. Now we need you. Where are you? Show yourself. So, 664,215.36. 664,215.36. When you subtract 584,200, what do you get? See, I was solving this. So where do I put it? I put it exactly here. 80,015.36. Did I solve this? No, I only solve this. So I go down with it. 39, it's not 36, over 100 plus 155,505. What's our next one to solve? It's this. It's sign number 2. Sign number 2 is this one. So let's solve it then. Let's say that what is 39 over 100? 80015.36. We're solving this, so we put it directly here. 31,205.9904. This we have solved. Have we solved the last one? No. Therefore, 155,505. Because it's already here, we can just add 155,505. It says that we have 186,710.9904. This is 990. This is what we're supposed to pay, but because of our lenient government, we have discounts. Remember, discounts, they work after the brackets. So which discounts do we have? First of all, we have the discounts based on age. How old is the individual? 50 years old. 58. 58 years. 58 years falls under which? It falls under the primary rebates. So primary rebates are these ones. The first one. You see, they didn't even write. But because we have 3 rebates from the first video, primary, secondary, tertiary. 58 years old, they fall in this one. So that means that it will be 14,958. Another discount, it's the medical. We have calculated the annual medical here. It's this one. It's 12,816. Now we already have it here. We can just simply say 14,958 and subtract 12,816. We are going to get 158,936.9904. Are we done? No. Why? The question said, what is the monthly? Monthly, we are proving a monthly. Her monthly tax contribution is 9,111.75. Let's prove that. How do we take it from annual to monthly? Divide by 12. So let's divide this by 12. What do we get? It's actually 13,244.749. 7492. We can round this off. It's the final answer to 2 decimal places. Invalid. Question was saying that Mrs. Ndlovu stated that her monthly tax contribution is 9,111.75. No, it's not. Why? Because it's 13,244.75. Now that is how you practice. And that is how you make sure that the practice is exactly as it's supposed to be. So, thank you for tuning in. Now, go and practice even more. Keep well.